Have you always wanted to own a rental property but didn't know where to get started? In this video, I've grouped together the first 5 chapters in my free mini-series So You Want to Own a Rental Property. In the next 10 minutes, you will learn why I created the series, why invest in a rental property, what is equity, what is cash flow, and what is appreciation. Let's get right into it. Hi, my name's Garrett Wong. Welcome to my new series, So You Want to Own a Rental Property? Let's start with who am I? I'm an investor. I've been investing in Winnipeg since 1999. At one point in time, I owned and operated 75 doors in 43 buildings. Now that was made up of single-family duplexes and triplexes. I was also a realtor with Century 21, and I'm also the owner of a property management company that's been in business since 1999. We manage hundreds of properties for investors around the world. So why am I doing this series? Well, I want to give back. Most business people are afraid to give out the secret sauce. My goal is to create informed investors, more knowledgeable industry, maybe better educated investors. This has no gimmicks, no upsells. I have no system that I'm selling you. This is just common sense property rental investment techniques that I wish someone would have shown me and given me when I started out. How is this series going to work? First, I don't know about you, but I have a really short attention span. And these videos are on social media, YouTube, etc. So similar to my FAQ series, hopefully you've seen that, I'm going to keep it short, like under 2 minutes short if I can. Each week I'm going to record and release a new segment that builds on the previous week's content, but each segment can stand on its own as a hopefully valuable piece of information. So are you ready to begin? All right, let's go. Oh wait, I've already burnt up my 2 minutes, so you're going to have to wait till next week. Welcome to the very first video in the series, and in this segment we're going to be discussing why should you invest in a rental property. Are you ready? Let's get right into it. So why invest in a rental property? Well, it's important to speak about other types of investments first. We've got stocks, RSPs, GICs. You can even leave money in the bank. But back to basics. So what is an income property? Well, the definition is it's property bought and developed with the intention of earning revenue from it. We have different types of income property. You've got residential, single-family homes, multiplexes, apartment blocks, commercial. I think the main thing is how do you make money in that? There's cash flow, property appreciation, there's principal pay down by the tenant paying the rent, tax write-offs. We also have ROI, or return on investment. Let's talk about a $50,000 investment at 7%. If you know anything about investment, there's that rule of 72 where it would take at 7% 10 years to double your money. What can you do with that steady 7%? So let's take the same $50,000 investment, purchase a rental property, you add your cash flow, appreciation, principal pay down. I would say most people on an average property would earn $20,000 to $25,000 a year on a $50,000 investment, and that's a 50% ROI. It sounds a little bit better than leaving your money in a bank, doesn't it? To summarize, rental property is a great way to build operational and generational wealth. And in this segment, we're going to be diving into the concept of equity. What is equity? Well, the dictionary, and I looked this up, would say it's the quality of being fair and equal. Or there's another definition there, the value of the shares issued by a company. So we're getting a little bit closer. But really what we're talking about for equity is assets minus liabilities. Now, assets minus liabilities, this is how we calculate the value of a company. But guess what? A rental property is a business. You have to think about it as a business as well. And this is the most important lesson that I hope this series is going to teach you. So how does the concept of assets minus liability translate for rental property? It's quite simple. So an asset is what the property is worth. The market value is normally what we look at when we're talking about property value. For liabilities, it's what you owe on the property to the bank. And that most people understand is the mortgage. Now, if you're lucky enough not to have a mortgage, and then you only have the one number to worry about, which would be the market value. But if you don't owe anything on the mortgage, you're not taking advantage of leverage, which is the #1 rule in real estate, OPM, or other people's money. But we'll discuss more on that in a future segment. What did we learn in this segment? Well, equity is not an invisible thing. It's something that you can own, you can touch, If you're in a stable market, it will continue to build wealth for you in real estate for years and years. And the next segment, what we're going to be talking about next is cash flow, or rather, what is cash flow? In this segment, we're going to be dissecting the concept of cash flow. So cash flow, what does it mean? It's difficult to find a definition. It's funny, I Googled it. If you Google cash flow, you actually get the cash flow board game from Robert Kiyosaki. So quite simply, cash flow refers to the flow of money in and out of a company, okay? Now you remember in the last segment, we're trying to think of your property management or your property investment business as a company. So let's redefine what we're talking about here. Positive cash flow, so you take all of your income minus all of your expenses, and whatever's left over is cash flow, and hopefully it's positive. So what kind of income are we talking about here? Well, we've got rental income, laundry income, parking. What about expenses? Well, the obvious one, mortgage, property taxes, insurance. You've got maintenance and repairs. Even in the case of multifamily building, you would have utility bills. If you're not able to or comfortable managing on your own, you might have to add property management fees in there. Good cash flow really depends on the property. It depends on your expenses. It also depends on how much you spend on the property. At a certain point, the mortgage payment is going to be too high compared to the amount of rent that you can collect. And in my professional opinion, based on 20 years of analyzing this for our clients, in a single family home, you're going to hope for $100 to $200, let's say $150 to $200 after all of the above expenses. A duplex, maybe $300 to $500. Triplexes or larger, and apartment blocks, obviously that depends. This is for properties managed by our company, so that would include property management fees. So to wrap up today, what did we learn in this segment? Well, how to calculate cash flow. But some or most of you might be disappointed in the amount of cash flow. Many people think they're going to quit their job when they, with the income from that one property. But for $150 to $200 per month, you'd honestly make more, delivering newspapers. So why do we do it? Why own a rental property? The answer is actually in the next segment, where we're going to discuss appreciation. See you next time. In this segment, we're going to be diving into real estate appreciation. Let's start again with a definition. Appreciation, or rather currency appreciation, refers to the increase in value of one currency relative to another. How does this translate to rental property? Well, in a way, rental property is your currency. How does real estate appreciate, however? Well, the property may go up in value year after year. So for example, let's say you purchased a house this year for $200,000, and in your particular market, you might have statistics that real estate is increasing at an average of, let's say, 5% per year. So what does that mean? Well, do the math. 5% increase on a value of $200,000, so 5% times $200,000 is $10,000. So therefore, you bought a property last year for $200,000, and this year it's worth $10,000 more. So therefore, you made $10,000 in 1 year, and that's a pretty nice number. And that's why appreciation is actually more important than cash flow, at least in my opinion. So let's play around with the numbers, because that's kind of significant. What happens if your property was purchased for $400,000? If you multiply 5% appreciation times $400,000, now you get $20,000. And what happens if the market is increasing by 10%, which isn't out of the realm of possibility? At 10% on a $400,000 home, that's $40,000 of equity in your pocket. That's a good year's salary for most people. And all because you chose to own a rental property. Are these numbers real? Well, the National Bank of Canada thinks so. They did a study, and between 2016 and 2020, house prices actually surged in Canada by almost 40%. In 2021, the year this video is being posted, the Canadian Real Estate Association is forecasting a 9.1% increase across the country. So to summarize, it's pretty simple. Appreciation is good, but this is why people love real estate as an investment. So in the next segment, we're going to be talking market price versus market value and the differences between the two, because it's very, very important to determine the value of a property. Thanks for watching today. We'll see you next time. As I watched him put these together, I had to laugh and cringe a little. These were recorded when I first started my YouTube channel, and today I feel a lot more comfortable in front of the camera. but the information and lessons are timeless and very relevant. If you want to know more about how to own a rental property and manage it yourself, I'm releasing 2 to 3 new videos per week, so subscribe to the channel to get notified when they are posted, and also help grow the channel so YouTube will put this information in front of other people like yourself. And if you're interested in checking out a community of like-minded investors that have come together to share ideas and experiences about being a landlord, check out my Rent It Yourself community. Link is in the description below. Thanks for watching.